Hello, beautiful entrepreneurs. Welcome again to another session of Money Magnet with your host, Dr. Meiya, here at Explore Protect YouTube channel. I hope you're enjoying the sessions that we're having. If you're new to this video, welcome and please subscribe to the channel. And while you're already here, you might as well set your notifications on so that each time there's a new video, you are able to be alerted and know and be informed. There is so much that's happening here in the entrepreneurial haven. So welcome, and remember to also comment on this video so that we can engage in a conversation. So today, what are we going to talk about? I want us to talk about something very familiar and maybe something that we sometimes don't give it too much credence and too much attention. It's how do we measure the financial strength and, to a certain degree, performance of our businesses. Others might think that measuring financial strength or performance is really for the big corporations. In fact, it is even more important for a starting or an emerging entity than an established. There are many really metrics that we can utilize to measure the financial strengths, but really today I just want us to focus on only three key areas of measuring the financial strength or financial performance of our entities. And these are really some of the ratios or matrices that you're quite familiar with. The first one is profitability. The second one is liquidity. And lastly, it's solvency. I mean, as you can see, these are already things that you're familiar with, you've been engaged with. Probably some of you are dealing with this on a daily basis. But be that as it may, when you look at this bouquet of these three key metrics, in my opinion, these are some of the key indicators of financial strength that every entrepreneur must keep an eye and keep the finger on the pulse on how these three metrics are performing. So let's dig in. Profitability, as you know, is really your ability to generate profits or to generate positive net income after tax, the bottom line, as you know it, for a level of sales or a level of investment. So if you're making a revenue of $1 billion US and your net income is 100 million, and somebody's also making a revenue of $1 billion US, but the net income at 10 million, you can already see that even though the sales drive seems to be the same, the top line is the same, all these two entities are making $1 billion US, but the bottom line is an indicator of the effectiveness of managing the expenses here in between. So really the profitability of an entity is to say, given the $1 billion that you generated in sales, how much of that remains as net income or as net profit? And really, I just want us to focus on only two measures as far as the profitability is concerned. The first one I've already touched on a bit is really to say the profit margin or the profit margin ratio, as it's commonly known. It's really that net income, the bottom line, that you've generated as a percentage of sales. So in an earlier example that I used, if you're generating $1 billion and you're remaining with 100 million, as opposed to generating $1 billion and you're remaining with 10 million, you can already see the difference in proportionality as to the profitability of that entity. So it's very important to understand or to find out for yourself and probably look at the trend over time of what has been the profit margins of your entity, because this gives you a very clear picture of the efforts that you're putting into your business as far as realizing those profits are concerned. The second one under the profitability, the metric that I want us to be cognizant of and maybe track in our entities, is the return on investment. And really I'm putting investment here not differentiating between how the capital structure is, whether it's equity, whether it's, I'm not looking at them, I'm just saying, when you look at the total investment in this entity, what is the profitability amount as given to how much we've invested in this company. So it doesn't really matter. Here we're looking at the total size of the capital that is invested, not paying special attention to the composition of that capital structure. So these are the two key ratios in my mind that I would like you to go back to your business now. Just maybe look in the past 6 months of this year, which is 2022, what has been the profit margin each year, each month, and maybe do another exercise. Look at 2021, 2019, and 2018, and look at the trend and the pattern of what these two ratios have been as far as this metric of profitability is concerned. The second one is liquidity. Now, again, a very familiar one, which is essentially what is the ability to utilize your resources available to meet short-term commitments. And usually short-term commitments are time-bound. It's within a period of 12 calendar months. And again, I've already said earlier, you might want to look at the pattern and the trend in the past 6 months as far as this year is concerned, maybe average it to year to date, but also look at the past 5 years. And again, here, I really want us to look at, only two ratios that you can use to track the liquidity in the entity. The first one is current ratio, which is nothing else but really the size of your current assets as a proportion of your current liabilities. Put it different, if you've got current assets of $100 million and you've got current liabilities of $100 million, that ratio is 1-to-1. So every $1 in US ratio in current assets is available to cover $1 in current liabilities. The second one that you want to look at is the receivables turnover ratio, which essentially says what is the size of your sales relative to your debtors book. These are my sales relative to my receivables. Again, this to a certain degree tells you your ability to convert and to receive your dues, relative to your sales. And the last one, it's the solvency metric, which really speaks to financial risk analysis, if you so speak, because it's the ability to meet the interest payment and the principal payment. And this assumes that the capital structure is in such a way that you've got a combination of debt and equity. So this particular one is very necessary and very relevant to an entity that has got that mixture of debt and equity. So you want to understand what is the ability to meet the interest and principal payment as they are due and depending on what you are due. And remember, some of this, especially principal payment, you can divide it into two, into the long term and the current portion of it. Depending on how you want to be sophisticated about it, the current portion of it, if you like, you can even want to look and link it to one of the current dues, even though it's really part of solvency. And here, then, you really want to look at two ratios. The first one is the debt ratio. It really says to us, what is the amount of that debt as a proportion of the total capital that we're financing our entity. So if the total capital structure it's $1 million, and in that $1 million of the capital structure, 600,000 of it is in debt, then we know that our capital structure is such a way that 60% it's debt as opposed to 40%, which is equity. This is also good because leveraging is good, but you also need to be very careful that you don't go beyond the tipping point, because if the entity is too highly leveraged, it really exposes it to financial risk. But again, this is industry specific. I'm not going to go into that details. I'm just saying pay attention to that ratio. And lastly, the interest cover, the measure of adequacy of the company's profits to be able to honor the interest as it's due. Again, you really want to look at what remains from the operational profits, as a percentage of interest that needs to cover, to understand what is this capacity to pay for the interest. I hope you enjoyed the conversation. And as I said, like this video, comment on this video. It was your host, Dr. Meiya, here at Explore Protect YouTube channel, Money Market. Until we meet again next time, if you need to contact with me, my details are right below this video. Have a beautiful day.